Well, see, a day like today is more about learning when to step away than anything else. And were there some opportunities? Sure, sure. But all you have to do is look at this number right here. I can't make it bigger. I would if I could. 91.25 USD, which means 91 handles, is our daily range. That is disgusting. Let's be honest, right? And if you're trying to grab a piece of that, it means you're trying to grab what, 20% of the daily range? Usually you could get away with a 60 handle move or something, and now you're getting away with a 20 handle move, not even 15 handles. That's my average stop loss, and I don't take trades under 2R, right? And if you look at the basics of just trading in general, and we look at something very, very simple. Let's look at the daily opening price, right? Midnight open. Right here. Let's try to make it a little clearer. I believe I have a template for that. And apparently I do not. That's something I'm going to have to make. But right here, you have your midnight open. Let's say I mark that out with text. Where's the manipulation? Where's the distribution? Nowhere. Why? Because we had an inside day trading within previous daily high and previous daily low. If we look at a daily chart, it's pretty simple. You'll see it. Inside day, consolidating, right? Just look, even yesterday when we went so much back and forth, right? If you look at these wicks on a 1 minute chart, what will you see? Well, it's a ranging market. What's going on at the moment? It's going back and forth. But as I pointed out, there were still opportunities, right? More specifically, we had two news today, 8:30 and 10. 10 pointed at, as I want to point out, was more of an ejection of liquidity than where you'd look for manipulation. But if we look, even if we go a little bit lower and we just concentrate on those basics, never did we have a clear direction in price until liquidity was taken out. But if we zoom out a little and we mark out these highs, which we swept barely right here, all right, I would count that more as inducement than anything else. You could say 8:30 due to swing higher, and then we're going lower with the news at 8:30, which I don't remember what it was, right? But we had 8:30 news, and then we had University of Michigan, I believe, or Consumer Confidence, one or the other, at 10 a.m. So you'd look for that due to swing higher, and then move lower. Okay, what are we targeting? Right here, we have sell-side liquidity into a daily fair value gap. Sure. So you could have targeted that. But then, with that 9:30 Judas swing, we continued higher. So just from that information, before even being at the 10 a.m. news, I knew that today was going to be shit. And I'm being blunt like that because you guys have to understand, what did I look at? Liquidity and what it's supposed to do at certain times. And what did we do? We took out both sides of the range to then expand and take out another side of the range to then retrace deep. So what does that tell me? Okay, well, here, okay, a bearish idea is forming. Oh, but 9:30 Judas swing lower, taking out liquidity, and then displacement higher. What is that? That is the only valid move I would have liked to trade today, but I was waiting for 10 a.m. news, more specifically. So we manipulated higher before the news, then Judas swing higher, which is a retracement, taking out these highs. I believe there was also SMT at that time. I don't want to add confirmation to my old drawings, but yeah, see right here, we had SMT form. That was actually during lunch, so those are the highs. Yeah, right here. Okay, so there was no SMT. Sorry, maybe lower time frame SMT, but I want to concentrate on higher time frames because, well, why? Very simply, we don't have higher time frame inefficiencies. Right, this is my 4-hour chart. This is my afternoon and 10 a.m. candle. Okay, so we went from internal, we have an order block respecting the fair value gap, towards external liquidity, expanding further towards this liquidity. Okay, and then what's next? ERL to RL. If I add this level on my chart, so I'll go back to these ones which are synced, and I add this liquidity right here to my chart. Let's just mark it out very simply as sell side liquidity, right? Daily external range liquidity. And we go back to a 15-minute chart. This is the liquidity we took yesterday, and we were retracing towards internal. What was the internal? It was this order block right here. These consecutive down close candles. So what have we been doing since we retraced to that order block? Consolidating within, right? See, I'm drawing them out for a specific reason. Continuously taking out both sides of the range, right? We took out equal lows right here, relative equal lows. Just gonna mark it out straight, then extend it here, relative equal lows. Then we took out more sell side, went back to buy side, boom, went back to sell side, then took out more sell side, retracement inside the range. All that with a 90 handle range. So on days like this, you have to be more concentrated with not trading instead of trying to find the one or two perfect opportunities there's going to be within this range. And that is conservation of capital. Preservation of capital. That's the right word. Sorry, I was looking for it. But that's one of the hardest things you can do as a trader. So today's daily review is more so a psychology review other than price action. Why? Because price action didn't give us a lot of opportunities. Were there some? Yeah, of course. You can take scalps. You could have turtle swooped this pre-news or after the news. You had right here, boom, inverted fair value gap after Judah swing higher, taking out liquidity as well. Could have shorted that. And you would have had, well, with my specific rules, I would have looked at this range and seen this fair value gap and that liquidity within the fair value gap as a low-hanging fruit objective. But if we're being more precise, if there's liquidity here, I'm expecting this not to get respected and to dive all the way towards this inverted. So you could have had a trade right there. So if I look a little more specifically, we didn't have a retracement to this fair value gap, but we did have a retest of this inverted, right? Not even, never mind. It inverted as soon on this candle and never came back until, well, way later, I guess, if we're being precise, until right here. And taking a trade right here after consolidation right now, there needs to be SMT. We'll look at a little further there, but see, there were opportunities right here, none that were unicorn and none that were that high probability. Even if you took that those highs up here, let's just say we go look at ES to find SMT at 10 a.m. You'll notice that with that divergence right here, so yeah, you do have SMT, I believe. Well, not SMT as ICT teaches it, right? I'm just gonna mark them out so we're all at the same time. So it's these highs right here. So yeah, you do have how's it called, twisted sister or sixth sister, I forget how he calls them, but you did have SMT right here with higher highs on ES and lower highs on Nasdaq, but that SMT was broken before it went down. Just another sign of low probability conditions. Your goal as a trader is not to have one trade a day. Is it possible to be profitable with one trade a day? Yes, I can trade every day and still come out profitable. But especially as beginners, the real fight, the real challenge will always be to have the less amount of stress. Because the more stress you have, the more decisions you have to take, the worse you'll perform. Why? Because you don't have the experience to back it up. I still don't. I'm 8 months into actual consistent live trading. So you need a lot more time before you can actually start saying, hey, I can trust that I will follow my rules. I can trust that the setup I'm actually trading is a good setup. And I'm not just clicking the buttons because I want to trade right now. And see, today, If we didn't have a 10 a.m. news, we had a nice little run up. Other than that, there were no nice opportunities. I took 2 small scalps, ended up 1.2R on the day. It was disgusting. The only decent move I saw was this low resistance liquidity run in the afternoon. But if we look at all this, how many times would you have gotten stopped out? Well, let's see. Lunch trade right here. We had lunch lows, taking out lunch low. If I'm not mistaken, we also had SMT right there in the start of the afternoon. Yep, see, I even have it marked out, probably in a 15-minute time frame. Right here, we had SMT. I just marked them out with different colors based on what I'm looking at specifically. Here, let me take that off the way. So you did have opportunities at that point, but still, you would have gotten stopped out before. Why? Because there was SMT right here, and then there was also SMT right here. So you would have put your stop here, you would have trailed it up, put your stop here, try to enter within this breaker block right here, and then gotten stopped out with SMT, and then tried to re-enter, and probably had a worse entry because, as you can see here, we had very little retracements without any confirmation. And then what did we do? We went back down. So the whole day, to just say it again, were the perfect definition of search and destroy conditions. These are not the conditions in which you want to be trading, right? I have my daily candle right here. We went all the way up, wicked, all the way down, retraced to a close with 91 handles. That is horrible. We were stuck between liquidity and inefficiencies. But if I look specifically at that chart, right, what did we do? We swept previous candles high. I'm looking at the 10 a.m. candle, the morning. We swept previous candles high to go for previous candles low. And the rest of the day was just consolidation. If you want it more clearly, at 10 a.m. right here, we took out those highs, ran down all the way to previous candles low. If I'm talking about a 4-hour chart right here, that was a tradable move. But look at this. I'm going to be honest with you guys. I'm not holding a trade through all this shit. I either got stopped out because I trailed it too quickly, which is a big possibility, right? If you're entering somewhere here, my stop is probably around just above equilibrium. But if we look at an actual retracement within this range, let's say I bought my OTE, we kept going back and forth and consolidating at equilibrium. So what was the difference when this actually generated the move, and why not the sweep of these relative equal highs right here? Because they needed to accumulate more orders. We had consolidation. We have Powell speaking tomorrow with a bank holiday. It is a big weird week. Had a lot of events going on in the world right now. We are very due for something coming. All right, I don't want to tell a date or anything, but within these challenging times, if we can say it like that, what do? Well, you preserve your capital. You concentrate on only the best of moves. And on days like this, you're better off closing your charts than trying to take scalps. If you're experienced, that's when you can go further. For example, right here we had a move. We had SMT at 10 early in the morning right here. As you can see, these two lows, I'm comparing these two together. That was with the 930 swing. And then right here, we had higher highs, no divergence except on YM. That gave me confirmation right here. Took a trade on this fair value gap, the first one, I believe. If I point that out, a little trade like this. I was targeting this fair value gap. Thank you. This is a 26-point scalp for 11 risk. And I like to take those on days like this because there's always going to be little pieces of time where it's going to be clean, but it's never going to be the times it's supposed to be. So right here, I expected a retracement into this. I was pretty sure this was going to be high of day. but I also expected more expansion, and I was sitting in front of my charts for all of that. And if I hadn't done it so many times, I would have probably tried a few things inside of here, right? Because if I allow myself to scalp, I don't get to choose which setups I take, right? Well, yes, of course, but I'm going to take all the setups that look good at the time for me. Okay, so let's look at this. Well, okay, expansion, retracement. Oh, we're going to continue here, right? Oh, inducement even. Okay, let's put some money here. Oh, didn't take profit here because it barely run 10. Okay, and now you get stopped out. Then you're like, okay, well, shit, that means we're going down, right? We have market structure shift right here with displacement. Beautiful fair value gap, short right here. Get stopped out. Right? There's no way to predict this in advance, that your setup will or won't work. You have to submit to the fact it's probably not going to work. But how do you get more profitable? By choosing when you trade. And today was not a day that you need to choose to trade. So you did have opportunities. As I said, you could have traded this move up if you trade before news or right after the news. This was the cleanest move in my opinion, which did not give you a real entry until a retracement here. And if you held through this, well, GG's. I would never have. And then what did we do? No opportunity to enter either. You had your inverted fair value gap right here, but you were already too overextended to do anything. Now, if that is understood within your heads that you should not be trading this, let's analyze it deeper. I posted something on Twitter today that said that standard deviations remove all of the fuss. On a ranging day like this with 91 handles, how do you filter out good setups and bad setups? As you can see, I removed all my drawings because it's not about liquidity. It's not about anything else. Right here, using the standard deviations of this manipulation leg, right? I'm only using these settings. More specifically, all I would need to use is this. I only need to know the reversal range. Alright, because if it reacts within that thing, then I can count this as a retracement and a continuation higher. If I have an original consolidation, I'm not going to go in depth about market maker models. But just think about it. If at every short-term high, you just drew out your manipulation leg. Right here, that looks like a swing low. I believe it is. As you can see right here, our bodies respected those levels. Same thing right here. I'm not going to extend them out in time, but what I can do is, if I just make sure that they are at the right levels, I'm going to remove the levels. I'm going to remove price and keep the level. There we go. I just want to make sure I'm putting it at the good level. So 520 right here. But as you can see, we respected those levels before continuing higher. Then right here is another one I want drawn out. Well, very simple. Let me just check the low. 18498.5. 18498.5 right here. Same thing right here. Then if we move forward, all right, well, I have a manipulation leg here. So I'm going to be looking for it to go to those levels. Oh, that's confluence for this high. Sure. But once we start consolidating at equilibrium of this range, you have to question, is this truly smart money reversal? Is this a reversal to go higher, or are we just retracing? And if we're talking about retracements, that's where 1 and 1.5 come in. All right. And as you can see, just using my 1 right here, we never went for it. Okay. But I can also utilize the bodies of my candles to gain more information. And right here, we were within the retracement range, 1 to 1.5. I understand that is a lot of, oh, well, use it like this, and then sometimes use the bodies, and then sometimes use the wicks. But you got to understand it's ever-changing. Everything is dynamic within the markets. So when you're consolidating, you're not expecting it to respect algorithmic deviations in price. But once we have SMT at those highs, and if we draw our standard deviations at this high, same thing, failure to reach anything else. But if I use the bodies, 1 to 1.5. I'm not going to give it to you guys that easily, but I'm showing you some examples. So take note of it. Right here, I have a small manipulation that got us all the way to a 4 standard deviation objective during lunch. So that was start of the lunch macro, and we had expansion, consolidation within lunch, to then have an end of day return to the range. You know, we've been ranging all day. But let's say I only took setups when we were within a reversal range. So I'm not telling you just turtle soup anything where you see between 2 and 2.5. But what I'm saying is add that to understand, okay, well, this manipulation right here was to get to this level, taking out this liquidity, but we respected with our bodies this zone because we wanted to push higher. Okay, once we push higher, where do we go? Here, I'm not going to use this leg for standard deviations, right? So, what I can actually do, it used the low to the opening price of this candle, of the swing low. Right here, we've hit 1.5 standard deviation, 1 standard deviation, and then went lower. All of this means are signs that we cannot push forward. So if you're asking me what moves were clean, this move down, this move down, this move up following it, up to 1.5 standard deviations, and then you had this move down, which we went all the way to, I believe I was looking at 6 standard deviations. Yeah, right here. And then we just consolidating, right? So I'm just repeating the same fact where we had a ranging market, search and destroy, and you need to learn during those days to walk away. Yes, there's going to be a way to trade it. You're going to open Twitter, you're going to see a bunch of people who made money. Sure, so what? Tomorrow or another day, I made money and he didn't, or we both made money. I don't care. You're not trying to base yourself off of others. When you're trading, you want to concentrate on yourself, and that's it. That's it. I'm going to remove these from my chart, but just start utilizing them to get a deeper understanding of what's going on. And once these don't make sense anymore, so for example, I had standard deviations right here. We went to start a retracement, but then we're going back lower. If you did not stop once you saw the search and destroy conditions, taking both sides of our range and then going back in the same direction, if you stayed after that, any losses that incurred are on you. And if you win money during these conditions, the truth of it is you're just teaching yourself that you can trade those. I did that for a while. I still believe I can trade those, but I don't. Why? Because it's too much fucking pain. That is not worth it. The risk to reward for energy spent is negative based on the reward you will get. I can spend 3 or 4 minutes in another day and make 10R when here I'll have a difficult time making 2R in a day. And yeah, exactly, Emil. Stress to reward is not worth it in this specific thing. And what does stress go with? When you're a beginner especially, but also when you're very experienced, it comes with mistakes. Days like this, you make mistakes. So just stand back, you know? I know it's not the thing we all want to hear about trading, but it is the truth of trading. Some days you just have to sit on your ass and not trade, and that is actually the highest return you can get on that day, is not trading. And yeah, you can scalp here and there, like I did today. But see, today, none of my funding accounts got traded. None of them. All I traded were combines. Why? Because I'm going to be honest, I don't care if I lose a combine. I can just go on to the next. Right? At the point where I'm at, I'm reinvesting profits from my payouts, and I prefer it takes less time. So yeah, I do over leverage sometimes on combines. I do over trade on combines as well. And yes, I am bringing bad habits, but my good habits are already set in stone. See, today I did not trade on my funded accounts. Why? Because I noticed search and destroy conditions. I might miss out on one trade, but if I trade every time I see conditions like this, I'm gonna lose a shit ton more money than the little money I make when I get lucky and get a good trade within this. So I'm sorry for keeping it short today, guys, but as I said, it was more of a psychology lesson than a price action review. Starting next week, I'll have them all set up. I was a little sick last week, I'm gonna be honest. Well, last week, start of the week, so I did not do one on Tuesday, but starting next week, I'll have one every single trading day, as you guys learned from my economic calendar, which is in the announcement if ever. So thank you guys very much, and I wish you guys a lovely night.